Great. Welcome, everyone. We are planning to start on time because there's a lot of exciting things to cover. So welcome to this webinar entitled US Spot Bitcoin ETFs are live. What happens next? This is going to be a very, very exciting conversation on a very hot topic with some of the largest names in the space. So thank you for joining us. Just a quick introduction. Thank you very much to the Crypto Valley Association for hosting this. For those of you who don't know, the Crypto Valley Association is a nonprofit organization based out of Zug, but with branches globally in North America, Latin America, and the Middle East. We basically gather industry participants, foundations, projects, institutions, Web3 enthusiasts into this organization, and we discuss throughout the various working groups topics of interest for the specific population that's part of that. So I am super excited. Let's kick this off with a round of introduction. Please, to our speakers, tell us who you are, what got you into crypto, and why you're excited to be in the space. Ladies first, Krista.
Great. Well, thanks so much for having me. I'm Krista Lynch, and I'm a VP at Grayscale, where I lead ETF capital markets. So I work primarily with ETF stakeholders like authorized participants, market makers, liquidity providers, and the like to support our ETFs and make sure that they're functioning in a healthy manner. I originally got into crypto because I was working at a traditional ETF asset manager, and I had a curiosity for crypto. I enrolled in a class to learn more about it, and it really got me thinking about how you could put crypto into an ETF. So flash forward, and here I am now putting it into an ETF at Grayscale.
Exciting. Matt, how about you?
Oh, hey, everybody. And, thanks for having me. Thank you to Crypto Valley Association for all the important work that you're doing in the space. There's so much regulatory uncertainty in the US, and nice to see Switzerland being, a typical neutral party and trying to create some rules of the road that hopefully make it easier to do business in this space. So I am head of digital assets research at VanEck in New York City. VanEck is a family-owned asset manager, about 100 billion in assets under management. I came to the space, I started my career in journalism as a reporter at Bloomberg and CNBC. So I got very familiar early on with fake news, and I was always envious of interviewing people with bigger balance sheets than me. So got my CFA and met Kathy Wood when she worked at Alliance pre-ARC days and worked for her for 4 years covering tech on a global equity fund. So we were big believers in open source, even though Bitcoin hadn't come around then. Left Kathy and worked at a Hong Kong-based investment bank with Denitza, in fact, equity sales research and trading, and that company got bought by a Chinese state-owned entity, which kind of reinforced for me, issues of censorship and self-censorship, and the world was beginning to deglobalize. So I was getting increasing conviction that Bitcoin would be, a neutral asset that would gain market share over time. Obviously, COVID accelerated that, and joined VanEck 3 years ago to build out our product suite in the space.
Awesome. What an intro. What a life. What an experience. Exciting. Adam, how about you?
Thank you, Denitza, and thank you for the Crypto Valley Association for having me. Hi, everyone. So Adam Z, head of product development here at Global X ETFs. I've been with the organization for about 2 years now and lead their product development function for the firm. So this includes everything from new product design as well as enhancements and refinements. Our product development mandate can include everything from digital assets to equities to options-based strategies and fixed income and like. Prior to Global X, I was with the director of ETP product development for 21Shares. So in that role, about a year, helping them design and launch new crypto ETPs in the European market. And then before that was with New York Life Investments for about 13 years in both product management and product development roles. Last role with New York Life was the head of ETF product development for the firm. So definitely a pretty broad experience in both TradFi and crypto, especially on the product side. And what got me into crypto, I really started researching Bitcoin and Ethereum back in the 2017 cycle. It was interesting to me because it was an emerging technology that wasn't like any other asset class I had worked with in the past from a product structuring standpoint. And you think about Bitcoin's characteristics of decentralized store of value, a fixed monetary policy. This is all something that was very, very interesting and unique to me. So I began personally investing in it back then, very small amount. But when the opportunity came about to merge my personal interests and professional pursuits together, I'd welcomed that opportunity and made the leap over to the crypto space.
Yeah, we're all very excited to be in the space right now. Probably less so a year ago, but
Yeah.
a good bull market always helps. Yeah, so I'm going to be moderating this webinar. My name is Denitza. I'm part of the BD team at Bullish. For those of you who don't know what Bullish is, it's a regulated institutional crypto exchange, the fastest growing in the world, I'd say. We started the exchange in 2021 November, and we just surpassed 500 billion of traded volume on it since. So I can easily say it's one of the fastest growing exchanges in the world. I am also chair of the institutional working group at the CVA. We get together and discuss topics of interest like this one. Just a little housekeeping item for those of you who are not members, please consider joining us. We need you. We need more brains in the industry overall. So let's gather forces and do great things. And also they're hosting a very good conference in Zug on the 6th and 7th of June this year. So if you're in Europe, please join us. It's always a fantastic event. All right, so why don't you guys tell us more about your organizations? We're going to start with Grayscale because Grayscale is the history of US crypto ETFs. Krista, can you give us some like a quick trip down memory lane? You did to the SEC. So how did it start? How did it unravel? Where are you now, and what products are you excited about within the organization?
So Grayscale is probably best known for suing the SEC and kind of paving the way for the cohort of spot Bitcoin ETFs that came to market in January. So that was actually a 10-year project of ours that finally came to fruition this year, and we're very excited about that. So GBTC is our spot Bitcoin ETF, and we do also have a series of other single and multi-token assets that are available in various stages of their product lifecycle. We ultimately hope to uplist all of them, just like GBTC, into the ETF form. So GBTC is really like the poster child for what we hope that all of our products will be able to do. And then we do also offer some other products like staking, and we have an equity thematic ETF that's available in the US and Europe. And then you might have seen that we recently filed for another spot Bitcoin product. We're calling it BTC, the Grayscale Bitcoin Mini, and we hope to see that trading in markets soon.
Are you also introducing various products with various fee structures? Anything we should be excited about in particular?
Yeah, so the product that I just mentioned, BTC or the Grayscale Bitcoin Mini, is going to be a lower fee alternative to investors who are more fee sensitive. So GBTC was always envisioned to be a capital markets tool with great liquidity, a great track record. It's been around for 10 years, operated by crypto native specialists. And we wanted to bring a product to market that took into consideration that some are more sensitive to fees and maybe don't care as much about those capital markets features. And we're really excited about the way that we're going to be delivering it. So we're taking the concept of an airdrop for crypto native investors, and we're going to apply that to the traditional finance ETF. So shareholders of GBTC will actually receive shares of BTC in a corporate action similar to an airdrop, if you will.
Interesting. It's great to see that you're innovating and adapting to what the market needs. Matt, tell us about VanEck, also the man behind the operation. Anything you can share?
Sure. So VanEck is a family-owned business, started in 1955, and what's unique about the origin story is that the founder was going to school at night, getting his business school degree, and he was studying, Austrian economics, and he started an international mutual fund, which at the time was quite unique because there's a lot of home country bias. And in the late 60s, he got conviction that gold was going to depeg, and he pivoted that international mutual fund into all gold mining stocks, and it became the best performing mutual fund in the 1970s and really built the success of this firm. So when the current CEO Jan took the reins, he took to heart the innovator's dilemma and was quick to understand Bitcoin's potential role as a store of value and also a competitor to our existing asset base, a large percentage of which is still in gold and gold mining stocks. So we, for the first TradFi manager to file for a Bitcoin ETF in 2017. And when it became that clear that the regulation was not going to allow it, we started investing privately across the space in venture well, we bought Bitcoin, of course, and we bought Ethereum when that came to market, but we also started writing tickets into venture to build relationships, get access to deal flow, and that formed the foundation of our several private liquid token strategies. We have 100 billion in assets. About 1.5 billion of that is in crypto related. Of the crypto related, half of that is in European ETPs like Bitcoin and Ethereum and some multi-token baskets. About 400 million in US ETFs, including DApp, which gives you exposure to equities that are kind of pure play exposed to crypto, and then HODL, our flagship spot Bitcoin ETF, and then the balance is in various private strategies. We didn't love the kind of the over-the-counter trust structure that some brought to market because of the volatility and how they trade premiums and discounts to NAV. You could argue that caused the end of the last crypto cycle, because 3 Arrows Capital was using these shares that began to trade at a discount, and then they had margin calls, and your deleveraging cascade kicked off. So we do our token strategies in private form, and the way that we try to differentiate with our HODL spot Bitcoin ETF, we put in the largest seed investment of any manager, so $70 million off of our own balance sheet. We have the most skin in the game. We aggressively eat our own cooking is kind of the culture here. Design intelligent investment solutions, and then employees buy. I think we have differentiated research in the space with price targets and models for Bitcoin, Ethereum, and a number of larger layer ones. We've got the best intern on Twitter, and we've got the best ticker with HODL. So it has been a fee fight in the spot Bitcoin ETF arena with 10 very, very similar products. So we kind of joined the party a couple of weeks ago and cut our fees to zero for the first 1.5 billion, and that catalyzed a lot of inflows. Yeah, I'll leave it there for now.
I think, yeah, Bullish and your HODL ticker can probably compete if we were ever to list. But yeah, very aggressive, cutting fees to zero. Adam, how about GlobalX? We know it's owned by Mirai. You also recently launched a very exciting new smart beta product. Tell us more.
Yeah, absolutely. So GlobalX ETFs was actually founded in 2008, I should say, and we're a leading provider of thematic ETFs. And our mission is really to provide investors with unexplored and intelligent solutions. So our product line currently here in the U.S. consists of 91 ETFs with over $45 billion of assets under management. And while we're distinguished for our thematic growth and our income-based strategies, we also have strategies in the digital asset front, commodities, and risk-managed strategies as well. And Denitza, as you mentioned, GlobalX is a member of the Mirai Asset Financial Group, which is a large Korean asset manager with more than $500 billion of assets under management, and also a pretty worldwide footprint in terms of ETF platform issuance as well. So not only do we have affiliates here in the obviously US where we're headquartered, but we also have affiliates in Canada, in Europe, Colombia, Hong Kong, Korea, Vietnam, Australia, and collectively over $100 billion of assets under management within that ETF platform, but also very regions where that are more crypto friendly, right? From what we're currently doing right now, we obviously have 3 ETFs that are crypto equity focused that are listed here in the US. Our largest one being the GlobalX Blockchain ETF. The ticker on that is BKCH, has roughly around $167 million of assets under management. But I think what is really interesting to us now, and what you teed up for me very well, is we recently launched the GlobalX Bitcoin Trend Strategy ETF in partnership with the CoinDesk Indices. So it's a very unique strategy that is designed to help navigate the various crypto market cycles by providing dynamic exposure between Bitcoin and US Treasuries based on the current price trend of Bitcoin. So very excited to have that product launch last week, and looking to build some product awareness in it.
For those of you who don't know, Bullish bought CoinDesk at the end of last year, and the index business alongside Consensus, obviously the media business, is one we're extremely excited about. So yeah, look forward to seeing how this partnership unravels. Right, so we have a really broad public that has dialed into this webinar. I'm told we have over 100 participants. Some are great experts, others are just trying to catch up and understand what's happening in the space given the incredible price action. Can someone actually explain to us, and Krista, maybe we can start with you, how these ETFs actually work? And can you guys, all of us, help us understand what the opportunity is? Because just by skimming through some and talking to some industry experts, we're sitting at 110 trillion registered SEC AUM that advisors currently hold, but only a few clients are actually testing the grounds. I was in London last week at the Digital Asset Summit and was told that BlackRock has only approached 15% of their client base. So how do these ETFs work, and what are clients waiting for to see to jump in the space? Krista?
Yeah, I'm happy to start. So I'm a huge ETF nerd, self-proclaimed, and I would say that these spot Bitcoin ETFs are designed to work just like any other ETF. And that's part of the beauty of it. So if you have experience trading an ETF or even trading a stock, then you've experienced something similar to what it's going to be like trading a spot Bitcoin ETF. So Bitcoin ETFs track an underlying index, which is the price of Bitcoin. And that ETF actually invests in Bitcoin. So the ETF's issuer is buying and selling Bitcoin based on the supply and demand dynamics in the secondary market, which is where you or I, a retail investor, would be buying or selling that Bitcoin ETF. And I think one thing that's important to note is that ETFs were actually designed in the early 90s as a way to give access to investors to hard to reach asset classes. And that's exactly what they started doing with the S&P 500 and other broad equity indices, which, believe it or not, were actually hard to get access to at that time. Then in the 2000s, we saw this evolve to commodity ETFs, and GLD, a gold ETF, was actually brought to market in the 2000s. That was kind of the blueprint for how these Bitcoin ETFs work. And now we can finally say in 2024 that we have our spot Bitcoin ETF. So I think part of the reason why we're seeing what you alluded to as only the beginning of the investment into these products is because this is really bringing a novel asset class to market in a traditional wrapper, but it requires some time for institutions to get comfortable, see the track record, et cetera. And so this is really going to be a way for people to continue to get comfortable investing in an asset class that maybe they weren't comfortable with, maybe they were curious about, but now they finally have the tools to do so. And so I think in the coming months, we're going to see continued inflows into these products.
Exciting. And how big is the opportunity, Matt?
Let me just add one thing to what Krista is
Sure.
saying, just like to contextualize it. Maybe there's some software developers on here, I don't know, but we think of the ETF as like an API connection that delivers a Bitcoin-only exchange directly into the brokerage account of every investor in the US, and that is tremendously powerful. And the reason is regulation in the US prevents money managers from holding client assets directly. And with Bitcoin, you know, the not your keys, not your coin, there's just no regulatory structure to create that separation of powers, which is a hallmark of American governance in general. If you look across how we do things, a lot of checks and balances, and the enforcement of that general concept that an investment manager cannot hold client assets directly, the enforcement became much stricter under the Biden White House, especially under Gary Gensler, and the money managers in the space really are forced to use just a tiny handful of custodians, including Coinbase and Gemini, and that's why you see such consolidation at the custody side. It's a function of regulation. So it's the ETF wrapper, this handy mechanism that can represent a lot of different assets, both securities and commodities, and it delivers that asset into this whole range of money managers who buy stocks on a discretionary basis for their clients, meaning that the client says, you know what, if you think Apple's a good buy, you can just buy for me. You don't have to ask me. And there's approximately 50 trillion of assets tied to that type of model. And none of them have really bought Bitcoin yet, and that includes now. If you look at the bank-owned and broker-owned distributors, they still have not approve these products, and that's because a lot of times those financial advisors are operating off of a model portfolio that's set at the office of the CIO. It might typically be something like 60% equities, 40% bonds, and those models have to be rewritten, hopefully so that they're 60, 39, 1, or maybe even higher, and that just takes time. But from talking to our clients, we know that they are doing the work, and I think you're going to start to see some of those models trickle out. Some of them already have, from integrated platforms like Fidelity that has included Bitcoin even in its a conservative version of its all-in-one portfolio. So 1% allocation of that 50 trillion, you're talking about 500 billion, that is multiples of the inflows that we've seen here to date. So that's why we think the story is just getting started.
Great. Thank you so much for the granularity. Adam, thoughts on the opportunity or anything you want to explain on the inner workings? We actually had a question from the audience. I'll go through these at the end, but someone asked, please explain the naked truth about the real workflow of ETFs for Bitcoin. Does it involve buying and holding BTC in first instance or not? I think we largely covered that, but yeah, anything you want to add?
If it wasn't
Adam?
clear, the answer is yes.
Yeah.
Yeah, I think Krista and Matt both summed it up very well in terms of their points on the Bitcoin ETF. And one thing, maybe even just to even oversimplify it, because I think that obviously you mentioned there's a range of knowledge on this call right now. I think the spot Bitcoin ETF is really just a turnkey access to get exposure to Bitcoin without the need of things like self-custody, remembering passwords. You have better like financial and tax reporting for, at an extremely, low charge, right? Zero right now. But I think that's why that the beauty of the ETF wrapper lends itself very well to an asset class like Bitcoin. And I think the question that comes up a lot is like, well, why don't I just go on Coinbase and buy it myself and hold it? Well, I think all those things that what I just mentioned, the need for self-custody, God forbid you get hit by that proverbial bus, right? And what happens to your password? If your spouse or your loved one doesn't know it, then those could be lost forever. So I think that that's the one point I really just wanted to make is that turnkey access to getting exposure, which is a very nice feature of the ETF.
Thanks, very well said. I think you can never really oversimplify anything in crypto. There's a lot of assumed knowledge, but there's still a billion people that are yet on board in the industry. So thanks for that clarification. Okay, so moving on, now that Bitcoin paved the way for ETFs in the US, what's next? What are we excited about? ETH, ETFs, Solana ETFs, what's next? What's coming? Matt, do you want to kick us off?
Yeah, sure. But first, I think just how accessible this product is. It may surprise people who buys it. One of the largest Bitcoin miners is Marathon. They just reported earnings. I was reading the transcript. They bought the Bitcoin ETF during the month because it seemed like FOMO, but that's just an indication that there's a corporate buyer who may yet emerge. We still don't have listed options on many of these products. Those are likely to come this year, and that will bring US dollar financing into the space, because if you want to make a market on options, you have to bring a dollar balance sheet. And so I think that should make the derivatives market more liquid, including in the spot market in crypto, and maybe alleviate some of the high funding rates that we're seeing in the space. And then if you look at the market structure in this space, typically Bitcoin dominance tends to rise into the halving, and then subsequently, Bitcoin has its most explosive returns, but dominance falls. So we're expecting with the US election in Q4 to be the fireworks for the space, and I would expect Bitcoin dominance to fall. And in our private funds, which have performed very well, both beat Bitcoin after fees last year and off to a good start. Those are where we are hunting for good risk reward.
Interesting. Yeah, we'll delve into the U.S. elections shortly. Adam, anything to add? What are you guys excited? Maybe something that you can talk about that you're launching. Like what's next that we should be excited about?
Yeah, I think, obviously, Bitcoin has been in the headlines, and I think all of like us that have been working in the space for a number of years now, we understand how Bitcoin works and the benefits of it, et cetera. But to Matt's earlier point, that there's this huge segment of wealth management that still doesn't understand it, right? So I personally think for the balance of this year is going to be that continued education of Bitcoin, how that, what it is, how do you add it to a portfolio? What are the correlations between traditional assets, et cetera? So I think there's going to be a lot of education that's going to be front and center or for the balance of this year. But I think, from a products perspective, you're already seeing this shift away from just pure exposure to Bitcoin. You already have leveraged products here in the US. We have short products here in the US and also in Europe. And then we're starting to move into this kind of a factor-based approach of getting exposure to Bitcoin. And as I mentioned earlier, the launch of the trend strategy ETF that we had last week is our that further kind of evolution of getting unique exposure to Bitcoin in a new and novel way. So certainly very excited about that.
What about Grayscale? We need to know what Grayscale thinks is trending.
Well, I think one point that Matt made I really, really liked, which was we kind of went into this thinking that this was going to be a way for people to get access to Bitcoin who maybe didn't have experience with it. But we are also seeing that those who do have experience with Bitcoin are using the ETF as a tool to diversify how they invest in it. So it's not necessarily just a tool for those who are entering the crypto space. It's also a tool for those who are crypto natives who want to diversify how they hold it. And I think we would be remiss if we didn't talk about the Ethereum filing. So as many of you probably know, there's a host of filings in the works right now. May is kind of a soft-circled milestone that many are looking at because there is an SEC deadline to opine on one of those filings. So I think a lot of people right now are kind of speculating whether or not there will be approval for Ethereum spot products in the ETF form. That has changed tone over the past few weeks, and it's people are speculating in both directions. There's a lot of kind of fact patterns similar to what led to the uplisting of Bitcoin products, but there's also some differences. And I think people are going to be really, really laser focused on that May deadline to see what comes next there.
Exciting times ahead. I mean, I just listened to this and I feel so lucky that I work in the space. So we need to talk about the US elections because there's a change of administration happening very soon, which could potentially change completely the course of a regulation in the US. Who's willing to take a stab and walk us through what we can expect with the highest likelihood? Matt, do you want to start?
That's a very broad question, but I guess I'll give some ifs, like hypotheticals. The environment for crypto, both entrepreneurs and investors, is very poor in the US, partially because of these custody restrictions, and also because obviously the government is suing like the largest player in the space, which is Coinbase. And then just practically as a user, I still can't really use the Lightning Network in New York, as an example. If you try to claim a bunch of airdrops or interact with a bunch of protocols in the US, you can't do it. The market share of US developers, crypto developers, as a percentage of total has fallen from 42% to 28% in the last 3 years. There's strong disincentives for banks and brokers to be in this space. High capital requirements, stringent licenses required, and we can see from the performance of both the stock market and the crypto market, when Donald Trump is rising in the polls, the market is acting better. I've seen sell-side research on this. So a base case is that there would be, if the presidency changes, there'd be first and foremost changes at the OCC, which is the controller of the currency, who can make it easier or harder for banks to just hold this stuff on behalf of clients. I interviewed Brian Brooks, former head of the OCC, last week at the USC VanEck blockchain conference. First, he said, if there's an Ethereum ETF approved before the election, I'll eat your hat. He was talking to me. So he's very skeptical that he says it's political, that they will just make up any excuse to not approve these products. obviously, if the election goes through, given that Trump owns Ethereum, he would likely change the head of the SEC, and then the enforcement and some of those operational hurdles like custody would probably ease. But in order to clarify for sure the security versus the commodity question, and the U.S. is unique because we have two different regulators on this question, unlike many jurisdictions that have one, and right now our two regulators are turf fighting. We probably need legislation to solve the underlying issues. And as a result, we try to just not think about US regulation too much and remind ourselves this is an emerging market asset class, frontier market asset class. When you look at who's bullish on Bitcoin, it's people in Nigeria and the Philippines and Indonesia, young countries. When you look at who's skeptical about Bitcoin, it's people in France, Germany, Japan. That's old people. So you want to be on the side of the youth. But I do think, and the market is telling us that change in White House will be a positive catalyst for the price.
Thanks. That was really interesting. I think the government intervention in Nigeria is what reminded us again why Bitcoin exists. It's pretty incredible stuff we're witnessing. How about you, Adam? How do you guys think about regulation, the uncertainty, the upcoming change in administration? Anything you guys are holding your breath on in particular?
Yeah, I think what's interesting about the upcoming election, right, is that obviously markets are following it very closely in terms of who the new administration could potentially be. But I think what's unique about Bitcoin itself, right? It doesn't necessarily need a president, right? Its kind of greatest strength is that it's an uncorrelated asset and doesn't necessarily move with the stock and bond market. So instead, Bitcoin moves with the supply and demand, supply and demand, their kind of rates of inflation. So I think there's positive tailwinds associated with Bitcoin and crypto as a whole, right? So obviously the halving event that's coming up, kind of the strengthening of the U.S. Economy, and obviously with the launch of these spot products, it's obviously another strong tailwind for increased adoption within the space. So.
I agree with you, but I still think that the lack of a comprehensive legal framework in the US is dragging the entire industry. So it would just be such a huge catalyst for crypto if
And I think
things
some
were
of the regions,
to get a bit more transparent.
Yeah, no, totally. And I think some of the regions are doing it well, like in the EU with MiCA, right? Obviously passing a framework that at least provides a sandbox in terms of how crypto issuers and crypto companies are able to operate within the EU. So I think that's obviously a positive sign. But yeah, I would say I would agree with you with more regulatory clarity is going to be helpful.
Yeah, and I'm going to take the other side, even on the MiCA stuff. Like we've looked into asset issuance, stable coins, gold tokens, all that stuff. It's just still, if you're not launching at scale, it's hard to make the economics work. Although I will say we have an NFT product called Segment, which is a way to fractionalize ERC20 NFTs using ERC 1155, and it's a fractionalization engine, basically, that could have real world asset utility. And we've chosen to do that project out of Germany. And how ironic, this New York-based company, and when you go to our NFT project, you can't get all the utility if you're US-based. So there are some advantages to MiCA, I grant it, but still Europe, picking winners, surveillance capitalism at its max.
I think when it comes to MiCA, devil's really in the details. So we just really need to see what the ECB is going to do, especially when it comes to stablecoin regulation, because it's in a couple of months and there's still quite a lot of scrambling. But that's Europe for you. Krista, anything you want to comment on with regards to the election change before we actually jump into discuss other regions?
Yeah, well, I would say Grayscale is certainly well acquainted with the regulatory regime, having sued the SEC to get to where we are. I think one thing I would note is that the success of the launch of the Bitcoin ETFs, I think, is only going to provide more momentum for having to pay attention. They were successful. I think we're going to continue to see the masses invest in them, and that's only going to drive the upward momentum from both a political standpoint and also from just everyone being more well acquainted with what these are. So I think to most people on this podcast, we always thought that Bitcoin and crypto had validity and were a legitimate asset class. But now that we're seeing it come to market in this structure in a regulated way, I think that only lends credibility as far as the entire population can see to what we're building in the crypto space.
Exciting times ahead indeed. Yeah, so let's discuss other regions. Obviously, the US has been leading back. What about Asia, Latin America, Europe? What other regions are we excited about? Matt, you alluded to Europe. Anything else?
Yeah, in our venture investments, we've tried to focus on emerging markets exchanges. And so we have stakes in some of the local exchanges in Argentina and the Philippines and India, in the Middle East. And I think what happened, you mentioned Binance, what happened to them in Nigeria, to me, reads more of a local versus foreigner issue and less of a crypto issue, and actually is helping the relative market share of some of the local players. So the most sensitive part of crypto is when you're offboarding to fiat and each country wants to have its own visibility into that process and who the major players are. So emerging markets exchanges in the private markets, many of those valuations came down quite a bit in the bear market, big layoffs and restructurings. And we continue to see stablecoin volumes rising in specifically, I mean, the obvious places, right? LATAM, Middle East, and Southeast Asia. And we're expressing that through first, like not losing conviction when it's a tough tape on US regulation, because that's not what's driving this. What's driving it is the real adoption in emerging markets. And then we also have actively managed emerging market debt and equity strategies. And we have been collaborating with our fixed income colleagues as they analyze sovereign debt. They made money from the El Salvador bonds. They've done some work in Ethiopia, which is the most recent country to adopt, to mine Bitcoin for its own reserves. And they are in the process of negotiating with the IMF. So there's a lot of game theory behind the scenes as to what countries will do with Bitcoin before they get that stick from the IMF that's like, we're not going to bail you out if you don't do X. Like what happened in Pakistan last week. Pakistan's negotiating with the IMF for $3 billion bailout. IMF says, well, you have to collect these taxes on crypto. It's like, dude, crypto is illegal in Pakistan. What taxes are you talking about? But this is the back and forth, and some percentage of those countries that are on the fringes of the global financial system and looking for financing will object to these IMF demands and instead choose crypto and Bitcoin. Looks like that's happening in Ethiopia. Obviously, it's happened to a certain degree in Argentina.
Oh, thanks for that trip around the world. Super insightful. Adam, what about Asia? Maybe, you can even tell us what Mira as a group thinks. It's a pretty significant one. So what can we expect in Asia or anywhere else in the world?
Yeah, I think Hong Kong seems to be an interesting spot, right? Obviously, there's a lot of opportunities there. They actually have a listed Bitcoin futures ETFs, I believe 3 of them, but also the securities exchange over there is actually getting these spot Bitcoin applications as well. And I think it looks like today that Hong Kong may allow for in-kind creations and redemptions for their spot ETFs if and when they should launch, which actually is obviously different from what the US structure is currently right now, which is cash creates only, right? So I think that's going to be an interesting bright spot within the world is Hong Kong, right? Because obviously Southeast Asia is a large crypto hub, and should investors have access to these spot products in Hong Kong, that could again create even more demand for Bitcoin. Which again, very interesting location that we're looking into.
Anything for you guys at Grayscale?
Yeah, I actually just got back from London, and one thing that is promising to see there is the FCA had a kind of change in stance 2 weeks ago on their acceptability for spot Bitcoin and Ethereum products for institutional investors and through their kind of preferred mechanism, which is an ETN. But it's promising to see any traction in this kind of regulated vehicle around the world. So that was one takeaway for me from a trip that I was on.
Great. I mean, that's so very, very exciting. I think we can jump into the Q&A from the audience. We have a question. What is the relationship between between options, futures, crypto ETFs, and BTC price moves? I mean, you guys knew that we were gonna have to talk about the BTC price target. You can pick short term, mid term, long term. Can someone walk us through, how these inflows are impacting prices and what we should expect? This is not investment advice, obviously.
I can jump in quickly. So I guess what I would say is that, as we mentioned before, these spot Bitcoin ETFs do actually purchase Bitcoin when there are inflows to the funds. And so you have all these products in market now that are buyers of Bitcoin as we see inflows to the cohort. And so that is just another avenue for demand to be, manifest for Bitcoin. And I think also, as we alluded to earlier on the podcast, we're just at the beginning of this being something that the masses can invest in easily. We've made Bitcoin much easier to access. And I think we should expect to see the space continue to grow. And that's only going to, again, lift the price of Bitcoin as we go forward.
Yeah, the growth in the derivatives market and futures volumes is just the other side of the coin of the ETF demand, because when the market makers are receiving orders for Bitcoin from an ETF sponsor like VanEck, they have to go out, buy the Bitcoin, and then they short futures on the other side to hedge themselves. So I think that helps explain the large increase in the futures and options market. It's still a very immature market in crypto because of the counterparty risks that we've seen cycle after cycle. But I think one interesting data point is that when Gary Gensler made his speech at the Aspen Institute in 2021, giving the green light for Bitcoin futures ETFs, he remarked that the underlying liquidity on the CME futures market had reached a point that these products were appropriate. That was about $2 billion in open interest. Recently, Ethereum futures passed that $2 billion in open interest. So it's, from our perspective, going to have a hard time for the SEC to deny those products based on a liquidity argument. At least my personal opinion. No information on that. So I think we should expect to see the derivatives market grow because now it's tied up with regulated entities in the space, and that will make balance sheet expansion somewhat less risky.
Also, as exchanges like ours get more regulated, people are just going to feel more comfortable to trade them. I think there was another question from the audience. Someone's asking, how long are these ETFs going to run for until people get comfortable enough to start buying the coins directly? If you guys were to just take a guess, how long do you think that would take?
I mean, there's always going to be a room for the speculative route, the self-custody route. People have different use cases for the asset in different ways. I think the ETF package will be enduring.
Yeah, and it's a way to diversify your exposure too. So while you may have spot Bitcoin, you may also have the ETF. It's not that the two are mutually exclusive. So I don't think there will necessarily be like a point of crossover. You may start to see people actually hold both.
Shades of crypto, full on in your portfolio. There was another interesting question from the audience over the last couple of days with regards to Bitcoin liquidity specifically. So what happens if there's lack of supply, which means that on-chain transactions fall, which means that there's less revenue for miners? It's rather technical, we need someone who understands the dynamics also of mining and how that changes the price of Bitcoin. Anyone willing to shed some light on the topic?
I mean, when an ETF sponsor, is purchasing Bitcoin, there is an on-chain transaction that is made. Now, it may be a larger size and consolidated wallet, but there is gas being used. So, or rather Bitcoin being mined and fees being generated. So I just think this is the push and pull between what's the narrative and use case that's dominating the asset at any given point. Right now it is, more speculative buying from North American-based investors. This will ebb and flow, right? And we're hopeful that some of the innovation going on in layer twos is going to catalyze more utility at the kind of P2P payments level. But frankly, our price target on Bitcoin is based on a multiple to gold. We are not including the upside from, possibly micropayments utility. So that's hopefully the next leg of this bull market, go out there and build some better L2 apps.
Yeah, and if you look at how long it took to get to the ETF AUM that we're seeing in Bitcoin, it's definitely a very staggering difference. So great. So we are perfectly on time. I don't think we have any other questions that would be relevant to discuss. Anything you guys want to talk about? Any closing remarks? I think this has been super useful for anyone who's willing to learn more. Please feel free to contact our panelists. They can share some reading. I'm sure that all your companies publish extensive research on these ETFs and the market dynamics. Yeah, so please feel free to reach out. Anyone else want to talk about anything specific? I think we've covered a lot of ground.
I would just echo that education point. I think all of us are very open to talking about all of these topics, and we welcome questions. So certainly feel free to reach out, and we're happy to discuss further.
Thank you. Yes, and yeah, if you're not members of the CVA Valley, please join us for more webinars like that. Thank you guys so much. I think that you've managed to give us a wealth of knowledge, a lot of interesting points to think about. And yeah, maybe we can gather again in a couple of months and the ETF scene would have completely changed and exploded. So yeah, stay tuned.
Thank you.
Thank you, everyone.
Thank you guys.
Bye-bye.
Have a good evening. Bye.